Good morning, everyone. Welcome to today's breakfast meeting brought to you by Vetiva Capital Management in partnership with Frontier Africa Reports. On our agenda today, we have a we will get a review of the capital markets by our analysts, and we have joining us today our partners from Securities Ghana, giving us a review of the Ghanaian market. We will then conclude with headlines from across Africa brought to us by our media partners, Frontier Africa Reports. At this point, we would like to remind everyone that this meeting is being recorded and the audio files may be shared with third parties. We're also live on our Vetiva online Facebook page if you'd prefer to join us from that platform. Finally, during the duration of the 30-minute session, you may send in questions using the chat functions available on Zoom or Facebook. However, if you prefer to speak, we would have a Q&A segment where you can use the raise hand function and you'll be granted an opportunity to speak. We'll now start off the session with Simbiat from our Global Equities desk. She'll be taking us through some markets across West Africa. Good morning, Simbiat.
Good morning, Angela, and good morning to everyone. So like she mentioned, I'll be doing a quick review of Friday's activities in the BRVM and Nigerian equities markets. And starting with BRVM, so just as expected, that market closed the week bearish as the composite index closed down by 1.17%. We saw investors continue to take profit in the likes of SOGB Côte d'Ivoire and Bolloré Transport, as both counters closed the week as one of the worst performing stocks, shedding about 10% last week. Other counters that closed down on Friday were Oro Group and SGB in banking, while SITAP in consumer goods also lost points, as we saw all sectors close the day in the red zone. Speaking to market activity, this also trended down with turnover declining by about 39% as EcoBank recorded the highest volume of traded shares. So going into today, we expect to see a bit of recovery in terms of performance and local demand boosting activity levels. In Nigeria, markets closed the week on a positive note as the ASI gained 17 basis points. However, week-to-day return for the market closed down by 6 basis points due to the profit-taking activities that persisted during the week. On Friday, market was lifted largely by the banking sector, both in terms of market performance and activities, as investors took advantage of the lower price points, given the bearish sentiment earlier in the week. We saw the likes of Wema Bank, UBS, Sterling all closed positive, lifting the sector by 1.76%, while we saw trades in FBN, Stanbic, GTCO, and Access account for 64% of market turnover. So overall, activity level improved as market tried to recover from previous lows. Volume improved by 72%, while turnover increased by 69%. We saw market activity dwindle last week, and when we compare with prior week, volume and turnover fell by 35% and 48% respectively, as investors continue to take profits given the bullish sentiment we saw in the prior week, which was brought on by the better than expected earnings results, especially in the consumer goods space. So going into the new week, we expect market to trade mixed with trades in the banking space boosting market activity. Thank you, and that'll be all from the equities desk.
Thank you, Simbiat. Speaking to us next, we have Daniel from Securities Ghana giving us a review of the Ghanaian market. Good morning.
Hi, good morning, Angela, and welcome to a new week. I'll start with Treasury bill space in Ghana. Government of Ghana was unable to meet its target once again at the regular Treasury bill auction on Friday. It raised around 76% of the target amount, which was 1.49 billion Ghana cedis. Apologies. So it raised approximately 76% of the target amount, which was around 1.49 billion Ghana cedis for 91, 182, and 364-day bills. Yields for 182-day bill remained stable at 13.16%, while that of 91 and 182-day bills rose by 2 basis points and 3 basis points to 12.48 and 16.29 levels respectively. There is still tight liquidity on the market, leading to decline in treasury bill participation. On the local currency bond market, we saw activity being somewhat active last week, while the two treasury bond issuances were underway. Decent sizes of 2023 maturities dealt at 20% across the week. Significant volumes of 2026 and 2027 maturities also traded at 20.3 and 20.45% levels respectively. On the other hand, Government of Ghana raised approximately 1.36 billion Ghana cedis and approximately 258 million Ghana cedis for 2-year fresh issuance and 5-year tap issuance last Thursday. We expect to see yield inch slightly higher this week, of course, as a result of tight liquidity on the market. And finally, in the Eurobond space, Ghana Kev outperformed after a series of profit taken earlier in the week and low dealer inventory levels met by speculative buyers. The front end of the curve attracted multiple buyers last week on the back of attractive yields. We bet on the curve's recovery, although Ghana still remains stressed. That's all for fixed income. Thank you very much.
Thank you for the updates, Daniel. Up next, we have Omorige, who will be giving us a review of the Nigerian fixed income and currency markets. Good morning, Omorige.
Good morning, Angela. Good morning, everybody. System liquidity declined significantly to open at about 41.8 billion positive on Friday from the 130 billion positive that was recorded on Thursday. Despite the decline in system liquidity, interbank rate losing by an average of 56 basis points in the absence of any significant funding need in the market on Friday, as OBB and overnight rate closed at 12% and 12.38% respectively. For today, we expect interbank rate to trade at similar levels, barring any significant change to system liquidity. The parallel market remained flat on Friday to trade at 570 naira to $1, while the earning window opened at 414.13 naira to $1. The highest trade that was recorded on Friday was 444 naira to $1, while the closing rate was 413.30 naira to $1. Brent and WTI both gained about 1.1% to open today at 83.64 and $82.14 per barrel respectively, amid tighter supplies and increasing demand for oil. The TV's market traded on a relatively quiet note to close last week, with bullish sentiment seen on the short-dated maturities. We witnessed continued interest on the mid to long end of the benchmark curve, especially on the 31st March 2022, 25th August 2022, and the 27th October 2022 maturity. That's a newly issued 1-year paper, where few trades were consummated on the 10th February 2022 maturity. Overall, average benchmark rate declined by about 10 basis points to close at 5.28% on Friday. The OMO market closed last week on a relatively active note, with mixed sentiment seen across the short to long dated maturities. Interest we are seeing on the 25th October 2022 maturity, while trades were majorly consummated on the 14th December 2021 and the 4th October 2022 maturities. Overall, average benchmark rate declined marginally by 2 basis points to close at 5.99%. The bonds market closed last week on a quiet note, with little activity seen across the benchmark curve. There were interest along the mid to long end of the curve, especially on the 2037 and the 2049 maturities, while trades were majorly consummated on the 2029 and the 2037 papers. Overall, average benchmark rate rose marginally by 1 basis point to close at 11.92% on Friday. The Eurobond market closed last week on a very active note, with buy-side pressure seen across both the sovereigns and the corporates. The most actively traded sovereigns on Friday were Nigeria 2025, 2027, 2032, 2033, 2038, 2049, and the 2051 maturities, while the most actively traded corporates were the Access Bank PEP and the EcoBank 2031 Eurobond. For today, we expect the current weak sentiment in the bonds market to persist as investors continue to cherry pick attractive offers across the benchmark curve, while we expect the TB's market to open the week on a quiet note as market players trade cautiously ahead of the NTB auction that is slated for Wednesday this week. That'll be all for fixed income. Thank you.
Thank you, Amorge. Lastly, bringing us headlines from across Africa, we have Boasen from Frontier Africa Reports. Good morning, Boasen.
Yes, sir. Good morning. I hope you can hear me. Good morning, everyone.
Yes, we can hear you clearly. I'm sorry, I think we're having some technical difficulties with Boasen. We'll just give him a few minutes to join back in.
Okay, can you hear me now?
Yes, we can hear you clearly.
Okay, thank you very much. So apologies for that. So that's within the MTN space. The other story for us within the South African space is the Eskom's continued load shedding in terms of the energy, which is a major crisis in South Africa right now. Eskom, the national utility, is still making a whole lot of load shedding, and is continuing for the current week. In neighboring Zambia, there's also a problem with the state-owned energy giant ZESCO, putting more than half of Zambia into blackouts for a couple of days running now because of energy crisis also in the country. So between South Africa and Zambia, there's a whole lot of issues regarding energy or electricity, as the case may be. If we move a little bit out of that region, a few earnings are coming through from some of the markets like Rwanda's BK Group and South Africa's Pepco, which is a retailer looking at headlines earnings per share of more than 90%. Some of the retailers in South Africa have been reporting good earnings after the July riots. We've seen numbers from Mr. Price and a few others as well. Within the North African markets, the AFDB released the regional economic outlook for North Africa on Friday and says that the North African corridor will see the economic growth back to pre-pandemic levels. Egypt is looking to hit about 5% GDP growth for 2021-2022 period, according to latest forecasts from the European Bank for Reconstruction and Development. Within the Southern African space, we're looking at the Africa Energy Week, which is a major high-profile event starting from tomorrow till Thursday. Nigeria's Minister for Petroleum Resources, Minister of State, Timipre Silva, the MD of the NNPC, Owando, and a whole lot of others in the oil and energy industry will be there to be joined other energy ministers from across Africa to attend the three-day event. Mauritius Exchange is looking at a new trading system, which is expected to go live in the first quarter of next year. That's also part of the news. And on a final note, for us, the talk between the IMF and Tunisia is continuing and is focusing more on stakeholders' inclusion in terms of reforms. Tunisia is going through a whole lot of political issues, problems right now with President Said. A new administration is being put in place, but the IMF and the World Bank are not so too comfortable with what is going on here. So talks are still ongoing. Thank you very much. And that sums it up from our side this morning for this Monday. Thank you. Have a great day, everyone.
Thank you, Boasen. We have now come to the Q&A segment. If you have any questions for our speakers, you can send them in using the chat functions on Zoom, or you may use the comment section on Facebook if you're joining us from that platform. However, if you prefer to speak, you can use the raise hand function and you'll be called upon.
Hello, good morning. Can you hear me?
Yes, we can hear you.
Okay, this is to the equity analyst. I just wanted to know why MTN is giving out or wants to sell off about 14% of the shares. I just want to know why he's putting it out for sale.
Okay, thank you. Would like to direct that question to Luke.
Thank you very much, Angela, and good morning to everyone listening. So with respect to the question, right, MTN Group, that's the parent company in MTN Nigeria, like you said, is planning to sell some of his shares in the company. And the reason for this is because the parent company is planning to raise some funds from some of its listed entities in order to use these funds to pay down some of its debts. So the goal behind this is to raise money from its listed entities and use that to pay most of its debts. That has been the strategy for like 2 years now. I think it started late in 2019. We saw that when they sold some of their shares in Jumia, also planning to sell some of their shares in IHLs. And right now, the plan is to sell some of their shares in Nigeria. So once this is done, they will just use that to pay some of their debts in South Africa. I believe this answers your question. Thank you.
Yes, thank you.
Thank you so much, Luke. In the absence of any other questions, we have now come to the end of today's session. And on behalf of Vetiva Capital Management and our partners, Frontier Africa Reports, we would like to say a big thank you for joining us today, and we look forward to seeing you in tomorrow's session. Have a great day and good morning.